Hi, welcome to Volatility 411 for Tuesday, June 23rd. I'm Russell Rhoads, Head of Research and Consulting for EQ Derivatives. The S&P 500 has started the day off nicely, up around 0.5% or so. VIX was down 47 cents to 31.30 last I checked. The first 3 months of the curve still very flat, 31.30, 31.20, and 31.15 as you go from July, August, and September. Then, of course, October is an anomaly to the upside at 32.65. Get a big drop off to 30.40 and then 29 with November, December. In the VIX option markets, hey, speaking of December, the December of 2020 options were listed last Thursday. A little bit of action out there right now. Taking a look at the open interest, last week I noted that the October open interest in the option side, 2.5 puts for every calls. Normally, and at every other expiration, this is actually below 1, meaning that normally there are more calls in the open interest than puts. A lot of this put activity actually seems to be somewhat bearish. And taking a look at the trades today, a lot of October activity. In fact, the biggest trade, somebody sold 9,000 of the October 24 puts for $1.53. They also bought 4,500 of the August 28 puts for $3.33. This was a cost of 27 cents for each of those spreads, a 2-by-1 calendar spread. There was also a seller of 23.50 of the October 45 calls for $3.28. And then finally, there was a July strangle. Somebody sold the 60 calls for 84 cents, sold the 23 puts for 60 cents, took in a credit of $1.54. Very interesting when you think about those premiums. The July future was around 31 when they put the trade on, 29 points to the upside, 8 points to the downside on those two strikes, and they took in more premium for the 60 calls than the 23 puts. Just a good demonstration of how VIX option skew works. So with that, I'm Russell Rhoads, and that was your Volatility 411.